Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by CSU Bakersfield Small Business Development Center. Good afternoon. I'm Kelly Bearden. I'm the host and I am the presenter today, or actually the webinar host today and the director. So there we go, getting it right now. So number 295, it's October 18th, 2023. Got three great guests today. Going to be talking about a lot of SBA type lending today. Also a little bit to do with our City Bakersfield grant, but let's get going. Okay, so what is happening today, October 18th, 2023? Well, today we're going to talk about a lot of the SBA loan opportunities and some recent changes that were made in the program. I've got still some great SBA programs, a lot going on in SBA lending. Rates might be different. Things are changing there, but they go up, they come down. We'll see where they are now. So while we're on SBA, it's time to get an update, I think, on our SBA disaster offerings. And it's kind of really where we are right now on October 18th with this disaster that happened during the winter, culminating in March of 2023. So really kind of where are we now with the disaster program? What is still being offered? What is open? And what can I do? And have I been impacted in my business? We will get an update on the City of Bakersfield grant program. Our community calendar has some upcoming events of interest. And we'll talk a little bit about, which is, I think, incredibly relevant today. We'll talk about our small business credit survey, an update on it. If you recall that a few weeks back, maybe about a month ago, we had a representative from the Federal Reserve Bank of San Francisco, and the Federal Reserve nationwide puts out a survey based on credit and what is going on in credit for small businesses around the country. And it's based on surveys and about a 10 or 12-minute survey. And we'd love to have you participate because it brings us local information that can help not only us gear our programs toward it, but our voice gets heard. Our voice here in Central California, and more specifically in Kern, Inyo, and Mono counties. So let's do that survey. Our economic corner today, probably aren't going to have much time for that, but maybe we'll skip that into another week or two. But it was going to talk a little bit about the economics of the Fed. The Federal Reserve has the right to cut some certain fees, and some of those fees are for larger banks and what they charge as far as debit cards. You know, many of you I know probably accept debit as a form of payment, and traditionally, at least for the larger banks, they charge about 21 cents per transaction and a half a point based on that. So what has happened is efficiencies have incurred, and it's actually getting easier and cheaper to accept debit cards, and that fee might be going down. So that is going to be our economic corner today. We're not going to get into more in the weeds on that, maybe another time. Our capital corridor today is going to yield to a lot of the SBA loans. We will talk briefly about what we have been mentioning over the past several months on capital corridor, since it is totally relevant to our discussion today. As always, your questions will be answered live. You can go to the Q&A box. We will take your questions. And also in the chat box, you'll find a lot of the resources that we mentioned today. And our producer, Maureen Butcher-Dang, will be working the chat box, adding a lot of links for you to access and to pull information that is referenced today. And our poll. So yes, we do have a poll today. Kind of an easier, just kind of set the table for what we're going to talk about. And one of those things that we're going to talk about is SBA lending. And one of the SBA lending programs is the SBA 7A program. And actually, let's launch the poll and put the poll question out there. And it's in 2021, the SBA 7A guaranteed loan program was a total of, was it $8 billion? Was it $20 billion? $36 billion or $80 billion. So the total amount guaranteed by the U.S. Small Business Administration for the year 2021, and remember 2021, wow, that was a pandemic year. There were a lot of other programs SBA had out there, the restaurant revitalization, the EIDL program, that wonderful EIDL program, the PPP that so many businesses utilized, and other programs. But the 7A program also produced a grand total. Was it 8 billion? Was it 20 billion, 36 billion, or $80 billion in 2021? Okay, we do have 55% of you who have responded and trying to reach that magic number of 66.66%. 2/3 of you, if I can get those. And we do have that now with 66% of you participating in today's poll. Basically, the total amount of guarantees in the 7A program in 2021. So we are going to go ahead and end the poll right now and share the results with you. And we see that 39% of you say it's $36 billion. And that is the correct answer. Actually, about $36.5 billion was guaranteed in the Bellwether program, the SBA 7A program in 2021. 30% of you thought maybe 20 billion, 80 billion, 22%, and 9%, $8 billion. So $36.5 billion put out there in 2021. So thank you for participating in our poll today, and it's appreciated. It's great to have so much participation involved in there. Okay, so moving right along and going back and getting out of our poll, let's talk about some of the things that are going on, a lot of the different programs. And this is kind of a newer one because what we see is we see the status of the key local programs. And this is something that we did a long time. A long time we did this program slide where we showed the local programs. And let's just go over it in a nutshell here. The city of Bakersfield has an entrepreneurship grant program that has grants between $5,000 and upward to $40,000, very limited on the $40,000 program. We're experiencing some problems with Dr. Mark Novak joining, who is going to discuss this in greater detail. But in that program, it is open. It is accepting applications in that particular program. You need to go through a training program. You need to write a business plan and also have some one-on-one advising or mentoring. And then you can submit an application if you're within the city limits of Bakersfield and meet the eligibility requirements of residing your business in certain census tracts or meeting other lower income categories. But that program is open. Have been working with CSUB on this program, working with a lot of food type businesses with Dr. Novak and his team. So that program is still open. Now, also, we had a lot of disaster lending programs that were open for much of this year. The winter storms, the physical damage, last time I checked, was closed. Actually, we do have, we see now an economic injury program that is still open. So with the economic injury program, and that is if you have been injured in your business. Also, they're funding mitigation, and that's mitigation effects. If you were damaged in the storm, your business or your residence, you can actually fund measures that will keep that from happening in the future. So that is open. Our City of Bakersfield program for safety and security is open. City of Tehachapi has a program that is open, and that is regarding businesses in the downtown area. We'll have more on that next week. Also, your state small business credit initiative, that is loans through the state of California. We'll talk about that moving forward. And also, the employee retention credit is paused, and the Kern micro grant program has ended. So I did mention the City of Bakersfield program, and now would be a great time to bring in Dr. Mark Novak. I see Dr. Novak is in. Good to see you, Dr. Novak. And this is a program that I think that you can talk to. Yeah, I've got to give you my introduction, though, because, you know, you are the Dean of Extended and Global Outreach for CSUB and doing a variety of other programs at CSUB in addition to the business program. But as the dean of the extended education, and formerly in that position at San Jose State University, vice president of College of International, also while he was at SJSU, received his undergraduate in sociology from Rutgers, doctorate degree, that's why we call him Dr. Novak, from York University in Toronto, author of many books. Dr. Novak, it's great having you in here today.
Kelly, nice seeing you. Can you hear me okay?
We can hear you fine, Doctor.
Okay, very good. So I was just so interested in all the many programs you were talking about. There's so much opportunity out there for small, medium-sized businesses. And I'm gonna talk to you about just one of these programs right now. But I was just really impressed with how many you make available to people through your program here. So this is a really exciting program, and it's one that we'd like to see more and more people take advantage of. If you are primarily in the inner city of Bakersfield, or if you're a low-income person and you have a business that is located outside that area, then you are eligible for this program. Now, there are a number of different things you need to do in order to get involved in the food service management program. There's a training program, and we also want to work with you to develop a business plan. So we want you to be successful. So there are a few different items you have to engage in order to get the grant. However, there are many grants available, so you should feel very optimistic if you could use $5,000 or $10,000 to advance your business. And that could be something that we've seen a number of companies come forward already. We've begun to look at and review applications. And some of the companies are small shops that are selling goods to the public directly. And some are service industries. And some of the companies that we're seeing are doing technical kinds of work. So really, there's a whole variety of opportunities for people depending on the kind of business you have. Now, it's necessary, as I say, to be in that area of the city, basically the core of the city. And you can go to the website here for more information. You can see up in the right-hand corner, it says how you could, if you can take a look at that item up there and just use your cell phone and just copy that. You can get to our website, and then you can learn more about the program. But Kelly, this is such really an exciting opportunity. And if somebody could use $10,000 to put up new shelving in a business they might have, or do some marketing to advance their business, or maybe they're a food truck and they would like to talk about and think about opening a brick and mortar kind of facility, or they want to start another truck, or they need some equipment. I'm just giving you some examples of the kinds of things these grants could be used for. Somebody maybe wants to replace an oven, or wants to expand their business in some way by hiring employees. And that's something we really encourage. If the person who has the business wants to add 1 or 2 employees, maybe they have a restaurant or they have something like that, it would be fantastic to give this money to someone who could really use it in their business.
So, Dr. Novak, a couple things about the program. The training is, the great thing about the training is it's on demand. Anybody can jump in at any time and take it at their own pace. Can you comment a little on that?
Absolutely. I mean, one of the things we realized when we're talking about food service people, if they have a restaurant or if they have a customer-facing business, that they may not have time, certainly not going to have time to come out to the university, find a parking space, leave their business. In this case, let's say someone has a restaurant, I'll give you an example, and breakfast time and lunchtime is over. It's now 3 o'clock in the afternoon. They have some time to sit quietly. They can use their cell phone, get online. They can begin to take the training program. They could do it in the evening if they had a little bit of free time, and totally on demand. I mean, in other words, they could do 10, 15 minutes at a time, or they could gulp down an entire lesson in an hour or so. So getting through that program is great. And I think the other part of this is so exciting is helping somebody with a business plan. I mean, many people have an idea, or they have actually a good product. It might be cookies. It might be that they, everybody's always said, you make the best burritos I've ever tasted, you should open a business. And they think, I should be doing that. So here we have a grant available, but we really want people to have a business plan. So when they go and actually start their business, there's a good chance they're going to be successful. They've thought through getting the licensing properly done, getting the kinds of employee requirements done, making sure they have, if they need a lease on a property. And your office, the SBDC, is fantastic at helping people with those practical matters. So there are two pieces to this. One is a training, learning how to run a restaurant or a food service business effectively and be successful. The other part is working with Kelly, your operation, which is SBDC, and helping people to really get their business off the ground and be successful.
Well, it's really a great combination, training and then the one-on-one advising really kind of brings together. And it's always been a great combination, at least in my book. It's kind of like chocolate and peanut butter, get those two together. It's better than its original parts. So last words, Dr. Novak, anything to add?
The last word is we have money to give away. And, we're not going to give it away like that, but I mean, people can come by and apply. And there's, if you have a good business and you're functioning and you'd really like to get a little something, give yourself a boost and increase your profits, increase your revenue, and maybe grow your business in some new way, especially if you're hiring employees to help you out. This is the program for you. And we're really excited to be working with companies that want to grow and want to develop. So any way we can help, and you're there also, Kelly, if somebody's not sure how to proceed, then your office is terrific at helping people move forward.
Well, it's great. It's great working with you and Extended University on this. And you can call our office at 654-2856. I'm not going to throw out the 661 area code because you got to be in the city of Bakersfield. And if you're in the city of Bakersfield, you know the 661. So 654-2856, email me, put it in the chat. Somehow we can get you some information if you need it. Thank you so much, Dr. Novak.
Been a pleasure, Kelly. Thanks for the opportunity. Bye now.
So moving along on our capital quarter, we talked a little bit about the debt ceiling for small businesses over the last several months. And these are a lot of the factors of how you can be turned down for the types of lending programs we're about ready to discuss. And it could be as simple as your debt to equity ratio is out of whack. A lot of lenders will look specifically at the debt to equity ratio. It could also be limited by your business liquid FICO score, which is becoming a major source of reviews in many of the SBA analysis and other lenders as well. So if you're unable to demonstrate positive cash flow and going through a few of these, sometimes by minimizing your taxes can be an unfavorable situation long-term if you're looking to access capital. A couple of the other ones are know and identify the loan program requirements. Oftentimes it could be the economy, as we use the wonderful Bill Clinton quote from the 1990s. Sometimes it's the economy that could be a reason why it's difficult. But those are some of the things that we have been going through. A lot of the discussions we have been having around some of the factors that can keep you from accessing capital. But this guy, he'll get you accessing capital. He needs no introduction, so obviously I'm going to give him one. But Keith Brice, I kind of found this when I was looking through my Keith Brice slides, and one we've never used, and it's the night on 2017 and in 2017 that he received the John Brock Award, which is really, I think, one of the most prestigious, if not the most prestigious, community service award for the Bakersfield area and also Kern County. The night Keith received that, he has been the president of Mid-State Development, which I like to say is the largest SBA lender in Kern County by volume. I have not seen any recent statistics, so if anybody has any, please send them to me, because I'm going to continue to say that until that happens. Keith, let's talk about the SBA 504 program.
Yeah, thanks for that introduction. As always, I'm flattered, and I'm gonna touch on a little bit of the volume that was done in the SBA 504 loan program last year. And then I'm going to really talk about something that's pretty important in the SBA world right now. You mentioned the 7A numbers, Kelly, earlier. With the SBA 504 loan, in a real quick refresher, 504 is primarily for businesses that are looking to acquire property that they've either been leasing and they want to buy their own building, or they're expanding and need another location, or they're buying a large piece of equipment. So our program is I call it a graduate program, not necessarily similar to the 7A, but it is a program that quite a few businesses are using or have used in Kern County. As a group, the 504 industry last year, I'll give you a comparison. We did in 2022, and our fiscal year end is 9/30. And 9/30/2022, there were 9,254, almost 9.2 billion in SBA 504 loans approved. Fast forward to our fiscal year end that just ended 9/30/2023, we were down about 36% to 5,924 applications. Again, last year was 9,000, 5,000, and the dollar amount reduced from 9.2 billion to 6.4 billion, roughly a 30% decrease. And the main driver was interest rates. Rates effectively went up almost 300 basis points. So that's slowed the appetite for fixed rate real estate. But what we've seen recently is that's starting to pick up again as folks have realized that rates they're high, and they're going to be at a increased level for some time. A lot of projects are moving forward with the understanding that they'll refinance later as rates are reduced. At Midstate, we had some great projects we funded last year, and then more importantly, we had some projects that we're excited about that are going to come fund this year. If you're familiar with Bakersfield and Kern County, a couple of our flagship projects, the new Forgotti's, that's looking at a fall opening. It's a phenomenal restaurant and a phenomenal project. That one is off of Brim Hall in the Callaway corridor. We also have a new gas station, Shell station, that's also tracking to open up fairly quickly. That is on the corner of Panama and Old River. And we have AAA Meats, which is a large project off of Brundage. They are a meat provider in Kern County. We're excited about that. So those are some of the projects are going. The last rate, I think, was 7.2. So if you compare it to a year ago, where it was 4-something, rates have increased. Want to share my screen here real quick to the group. And the big thing that's happening right now is if you're borrowing for an SBA loan, whether it's a 7A or a 504, the dreaded new validation, what we call the 4363 validation. So what's happened is the SBA put a ton of money out in the various communities during the disaster period, and some of those loans have had issues. And what they've determined is we need to tighten up some of our tracking of borrowers out there, whether they're existing, idle, or PPP loans, or even existing 504 7A loans. So now we are required, and this is on every SBA application. John's going to talk about some of the 7A stuff. But if you're applying for an SBA loan, the first thing you're going to want to do is to make sure that your lender has done a check into the system to see if there is a issue, and typically it could be a 4363 code. I apologize for SBA speak right now. And most of the codes are circling around PPP and idle loans. So you've heard Kelly and I over the last 2 years, rave about the benefits of the PPP and idle loan. There were great programs, great loans, but if you neglected to get it forgiven, then past due on either one of those, you will now have a code in the SBA system that could pertain to some issues there. The challenge with lenders, both 7A and CDC such as Midstate, is we can't move further with any application if in fact you have one of these codes. So I got to emphasize again, if you had a idle loan or a PPP loan and there were any issues, then you may have that 4363 code. The other area that the SBA has changed in, they've always utilized LexisNexis as a search, and we do that here in Midstate Development. Well, LexisNexis does a deeper dive into your normal credit check that your lender would do. You go in and they pull your credit, and whether it's one of the credit services, they'll say, okay, have you been paying on time? And the credit services are limited on some of the reporting information. Well, under LexisNexis, they do a deeper dive. So far as an example is if you filed bankruptcy within the last 10 years or more, it will pop up on the LexisNexis. And everybody knows the old adage that after 7 years, it drops off my credit report. Well, it doesn't necessarily drop off your deep dive with the LexisNexis. So that's important. When it's not a decline, it's just for a lender such as Midstate or AltaOne, or you pick a lender out there, for them to proceed with your application, they're going to be doing more of a deep dive and a compliance check. And I'm not going to bore you with too many of these other screens here, but you have the ability to get what's called a pre-check. So in all applications we get now, we do a pre-check. We make sure, okay, is there an issue with whether it was a idle PPP loan, or whether it's a criminal history or anything like that. We try to go through the process of cleaning it up and getting answers before we submit. In fact, we can't submit unless those things are cleaned up. So again, important, SB is still out there lending a lot of money, but their due diligence now on credit history is pretty tight, and a lot of that is a result of the billions of dollars of idle and PPP money that were put out in the community with some issues on repayment. So we are making sure that if you have those type of problems, that it's cleared upfront. And with that, Kelly, I'm going to stop. I'll leave some room for some questions, especially after you hear what Jon has to say, and looking forward to answering any questions you may have.
Great. Well, great. Well, great to have you back on Webinar Wednesday. If we went back and added these up as many times as you and I sat side by side in 2020 and 2021, seems like every Wednesday, I would say you're probably about a 75 episode veteran by now.
Yeah, it's kind of scary that where has time flown. I've always enjoyed these webinars, and I hear people that go back and look at the recorded webinars, and I'll get a call on something we said 2 years ago. and which is good. We can verify what actually was done, good and bad. So always looking forward to these things.
Well, thanks, Keith. Keith Brice, everybody. Okay, moving along. SBA had some program changes that mostly affected the 7A loan program. So I'm going to just touch on these very quickly. One thing that they did was they tried to simplify the loan requirements, automating much more of the process. They're also looking to expand the pool of non-bank lenders that SBA has licensed. And this took effect on August 1st. It'll make it easier for fintech businesses to participate. SBA officials say they want to boost credit to small businesses that have had difficulty accessing capital in the past, as many in the agency felt that they had a favoritism, or at least favored bigger type borrowers, or many of the banks that they worked with at the time. The changes, though, and the decision, it's kind of the double-edged sword. We open it up and we have more lenders, maybe easier requirements. But the other thing is that it's brought on a little bit of criticism, saying it could jeopardize the program by increasing defaults. And also that what that does is it makes it difficult for some borrowers who are very questionable to repay their loans.
Hey, Kelly, I want to jump in here real quick. And a lot of those changes are the result of the success that the SBA saw with the PPP loan and bringing more lenders in the tent, along with driving a lot of the applications online directly through E-Tran. So a lot of the good stuff that came out of, okay, we can get money out and there are other players out there, came out of the disaster. And that's the changes that the SBA has made to those programs, which are all good, really, really are good.
So good changes happening. A little bit on the SBA disaster loan information. I guess I got tired of showing you my nice picture with all that snow to really show some more devastation. Now, I don't know too many people that own a highway, but so it really maybe not that pertinent. But it kind of shows you a lot of the flooding that could have occurred downstream in that particular program or that particular area. And so just going in here real quickly on some of the disaster lending programs and where we stand right now is that there was some business loans that were made, and that replaced where the damage actually replaced real estate or inventory, buildings, etc. And that is basically closed. The two I want to really focus on again are these economic injury disaster loans. The EIDL program, so many people are familiar with the COVID EIDL program that was around during COVID. This is similar, and it can be done in conjunction with it. But if your business was significantly impacted, if you had a reduction in sales, and it was caused directly by the weather conditions this year, you could be entitled to get a loan for as low as 3.3%. And that, again, would be a 30-year term on that particular loan to make you whole on your economic injury that you sustained. The other thing that we touched briefly on earlier is the mitigation factor and the mitigation loan. And again, what that can do is it can prevent a future loss of the same type. So if you have a particular weather situation that that very well could come back in 7 or 10 years, you can actually receive a low interest long-term loan to actually fix the physical problems that would prevent you from maybe suffering a disaster down the road. So those are the two most pertinent that.
Hey, Kelly.
Still open. So
Kelly, one thing I want to point out on your chart there is you look at the rates. Now, if you compare to what the rate environment is not for these programs, the prime rate is at 8.5%. So typically that's the starting rate on a lot of small business loans, and they'll do a add-on to that. So if you can get a 4% rate or a 4.7% rate, I highly encourage you to get that compared to rates that are pushing towards 10% right now.
Yeah, you can't beat that, especially with the long term, with the 30-year easy repayment and things like that. Thanks, Keith. The next one is just kind of the residential, which we really won't go over, but it is kind of unique to note that this is the only non-business lending that SBA does, and it will be to homeowners and renters that have suffered problems with the particular disaster. So our small business credit survey, I did mention it. The link is in your chat. Please go in and fill that out. I'm coming up with some type of incentive program for those of you that do fill that out. Maybe a raffle of some kind. Stay tuned. Let me incentivize you to fill out this. But in the meantime, go ahead and fill it out. City of Bakersfield, in addition to the Entrepreneurship Grant Program, has a Business Security Improvement Program. And so, again, if you're located in the qualified census tracts, a perfect qualified census tract is downtown. You can get alarms, security, lighting, repair smashed windows, etc. if you run into those particular issues. So also, like Keith mentioned, all of our webinars, or at least most of them, are housed on our CSUB YouTube channel, to where we do have about 370 subscribers now. So go subscribe and get an email every time we do another one of these webinars or one is posted on YouTube. So right now we're around 250 videos, but you can go in there and you can find, usually after a few days, the webinar. And one of the things you'll find in there is an on-demand webinar that was done a few months back on the EIDL program, and it told a lot of the people that have COVID EIDL program any of the issues that are coming up. It could be with your LLNA, which is your loan agreement and authorization. It could also be some of the other factors that you have. So that is in there if you're so inclined. On our community calendar coming up, the Small Business Expo, hosted by the Kern County Black Chamber of Commerce. It'll be a week from Thursday on October 26th. All kinds of fun stuff, a free event. The SBDC will be there. Also, community calendar coming up on Thursday night. And maybe a little something our next speaker will talk about is the SBA Lending Mixer. And this is kicking off the new SBA lending programs of AltaOne Credit Union. Last night, many of you know that AltaOne is headquartered in Ridgecrest, California. And so they were in Ridgecrest last night doing one that I'd hoped to attend, but didn't. And actually on Thursday night, they will be at the Bakersfield Riverwalk branch and be there talking about it from 5:30 to 7:30. So with that, let's bring in today's special guest, and it's Jon Urbano. He joined AltaOne Credit Union as the Director of Marketing in 2022. He was named the Business Development Manager and focusing on increasing business loan activity to small businesses throughout the Kern County and also the Eastern Sierra region. Engaged with other seasoned lending professionals to develop an SBA program that they're kicking off this week. Previously, Jon worked in commercial equipment lending for Toyota Financial Services. Jon, great to have you on. Thank you for joining us, and take it away.
Hi, Kelly. Thank you. Let me get my screen shared here. Yes, thank you. Thank you for having me on. As Kelly mentioned, I do work for AltaOne. I am the Business Development Manager for SBA, as well as indirect dealers. So let me go ahead and get started. So who is AltaOne? Many people don't even understand what a credit union is, and they compare us to a bank, which in essence, we are similar to a bank, but we do have anybody who makes a deposit into a credit union is a member of AltaOne and actually owns a portion of AltaOne, which then in turn helps us reduce our rates, right? So you get lower rates, you get auto rates, mortgages, many different types of rates. And again, I'll kind of go over that here in a minute. But AltaOne is a federally insured credit union. We started in 1947. We have over $800 million in assets, over 56,000 members, and 13 branch locations throughout Kern County and Inyo County. Some of the items that we offer. So business deposits, we have checking, we have business savings, money markets, term share certificates, as well as our business loans, which include Platinum Rewards credit cards, unsecured term loans, real estate loans, equipment loans, and vehicle loans. So as I mentioned, we do offer the same products and services that a typical bank does, but our focus is not the big business, but it's more so on the community and how we can help our small businesses grow and grow throughout the community. What is the SBA? So Small Business Administration, which was created in 1953. This is, again, to mention that I mentioned earlier, helping small business owners and entrepreneurs, giving small businesses that would not typically qualify for conventional financing, which is also partially guaranteed to grant loans to the businesses that have sufficient cash flow, but inadequate collateral. This SBA 7A loan program, this is the program that we actually offer. The loans actually range from $50,000 to $5 million. So $50,000 is the minimum that we actually require the amount to be. Up to $500,000 is considered an SBA 7A small loan. But so that's the range of product that we actually offer. The purpose of these: working capital, business assets or equipment, owner-occupied real estate, business acquisition. Unfortunately, at this time, we don't offer construction. But for example, many of the different businesses that have applied for SBA loans with us are transportation, people who need new trucks, to continue their business, to expand their business. We have restaurants who are purchasing other locations. So those are just some examples of what type of businesses actually look for SBA loans, and that can help them, right? So interest rates, Keith and Kelly mentioned, they touched on this a little bit. I have to agree, at 9% rate isn't the greatest, but if you can get anything lower, what our rates are, it's based on prime plus a margin, which our rates will actually adjust quarterly because of the prime rate. Our terms, so real estate loans, 25 years, which are fully amortized, equipment, which is up to 10 years, and working capital, which is also up to 10 years, all fully amortized. There are SBA and lender fees, as any loan typically has, but these can be financed into the loan. The guarantee, as we mentioned earlier, is guaranteed by SBA, and there is a down payment or a equity injection of 10% of the total project. A little bit about the eligibility. So I'm going to start here with the applicant. The applicant has to be for profit, and most of these are actually set by SBA. So nonprofits, unfortunately, we cannot have an SBA loan on that. Legally formed U.S. entity, must be a U.S. citizen or verified registered alien. Legal nature of business operation. So unfortunately, we can't do a cannabis distribution, right? Because it is still federally illegal, right? Good character, current on obligations, and I believe Keith had mentioned this as well. When it comes to bankruptcy, they do look at every little detail on your history, on your credits. So the max you can have, from my understanding, on as far as character is concerned, is no more than a traffic ticket, right? Anything beyond that, they will hesitate on approving a loan. So keep that in mind. They are very stringent, and that's the reason is because they are guaranteeing the loan. Capacity to successfully operate the business. So that's where we look at tax returns and financial statements. And also must be a small business based on NAICS code, and that is determined based on number of employees and annual revenue. So the uses of this loan: real estate purchase, inventory, machinery, new equipment, debt refinance, which is also a common request in some of these SBA loans, working capital, and business acquisition. So again, if you're buying a new business, you're buying someone out, buying your partner out, you have that opportunity to use an SBA loan. Couple notes here: the business must occupy 51% of the real estate purchased. They must have the intent to increase occupancy to 80%. There are personal guarantees of 20% plus ownership. So definitely keep that in mind. And affiliated businesses must be underwritten. So if there are any affiliated or parent companies, they will be underwritten as well. So they are looking at every little detail to see how they can approve these loans. SBA Resources. We definitely have this partnership with the SBDC, which is definitely appreciated. Again, thank you for having me here, Keith. But these resources are available to you, right? So if we have individuals that are looking for creating a small business, you can visit our website and you'll see these here: SBA.gov, the Service Corps of Retired Executives, SBDC here at CSUB, the Women's Business Center, and the Veterans Business Outreach Center. They're all there to help you create these business plans to get an SBA loan started. So before you get into, or before you start applying for an SBA loan, take a look at these resources, and they are there to help you. They are a free resource to get you started, right? So don't overlook them. The application process for SBA. So again, a business plan is where you need to start. Must pre-qualify. So in order to pre-qualify, what we ask for is we'll ask the standard questions about character and just to try to understand, because we don't want to waste anyone's time. But pre-qualify. So we'll ask you for tax returns so we can run it into a spreadsheet that we have to determine whether or not your cash flow is sufficient to move forward. Shortly after that, we have the submit documents on the SBA application checklist. Again, there are quite a few documents that are required, but it is definitely worth it if you can get this approved. Then underwriting, your decision, processing, and closing. Okay, so it's not an overnight process. It does take time to get approved and processed, but definitely worth it. What's the difference between a business loan and an SBA? So business loans, we're looking at established business based on historical tax returns, typically 2 or 3 years of tax returns, and requires collateral. The SBA loan, on the other hand, may be a new business or in business less than 2 years. We don't rule out businesses that are more than 2 years. So don't get discouraged if you're 3 or 4 or 5 years. Always check in with us. It is based on projected income. The loan may be under collateralized, and the new business is access to working capital, equipment, and real estate. As Kelly mentioned, we are having an SBA lending mixer. We did have one last night with quite a few turnout. We have one tomorrow night at 5:30 to 7:30. We have appetizers, beer and wine. Everything's free. I'll be there presenting a similar presentation, but also answering any questions that people might have regarding SBA and our other business products. So again, it'll be at the Bakersfield Riverwalk branch. Here you'll see the address, River Run Boulevard, but the cross street is Buena Vista. So it's just off of Buena Vista and Stockdale, across the street from Riverwalk Park. Here's my contact information. So this is my direct number. You don't have to go through an 800 number to get a hold of me. This is my direct cell phone. I'll have it on me weeknights, weekends, weekdays, whatever time you need. So if you have any questions, you can get a hold of me. And as I mentioned, our website here, altaone.org/SBA-lending. There's also the contact us online form. So if you want to just reach out to somebody in general at our business lending department, you can reach us there as well. So again, Kelly, thank you. Keith, great information out there. Thank you for everything.
Well, thank you, Jon. And it's great to have another SBA lender. And it's great to see AltaOne get their SBA shop opened, and look forward to referring clients to them and doing a lot of deals back and forth in our common footprint. A couple things real quick, Jon. And also for those of you out there, you got 2 great SBA lenders right here, and you can ask any question you want. So go to the Q&A box. We also have some questions in chat we're going to hit in just a few moments. But a couple things, Jon, that I observed, and you can maybe, if you want to answer this one, but AltaOne received the very first CDFI designation in Kern County, Community Development Financial Institution. And it's going to really kind of, I hope, work hand in hand with SBA lending. Do you have any updates on that?
Yes, so I was actually part of getting us CDFI certified, which it's Community Development Financial Institution here in Kern County. And what it is, it's to help the different communities that don't have access to a financial institution. So for example, Mojave doesn't have any access. There's no bank, there's no credit unions in that area. So what we're here to do is help those communities because they need business lending, right? And so we're there to help those areas that are underserved as far as financial institutions, and be able to provide them those SBA opportunities, right? And getting that information out to them because they don't have the financial education available to them. So by being CDFI certified and being able to help in those areas with SBA, that's really our focus.
Great. Well, look forward to seeing what offerings we can have from the CDFI in addition to the SBA programs for small businesses. Hey, I noticed also on your slides, on your SBA slide, you had a very nice picture of Great Basin Bakery. Mm-hmm. And, I don't very often or seldom at all speak for Keith Brice, but I know we're both fans of that fine institution. Matter of fact, my mouth's watering right now for that garlic sourdough bread. Oh, I wish you wouldn't have showed me that slide.
I believe their egg salad is actually something to die for.
Okay, so another time we can really get into the menu items, the sandwiches, breads, and everything there. And I know that they have actually catered our Eastern Sierra Capital Summit that we have held twice in Bishop over a 4-year period. And everything was outstanding. And, I just wanted to say that because you should be looking for an announcement on an upcoming Capital Summit that we're going to be hosting that we should be talking about in the next week or 2 or 3. So stay tuned for that information. But let's jump into the questions for now. And jumping right into the Q&A, it's not too late to jump into your questions. We'll go to the Q&A total first. And the Q&A first question was, how long does the program take to complete at a modern pace? So I believe that's the training program. And the training program that Dr. Novak spoke about is a 16-hour class. It's in, I believe, 8 or maybe 10 separate modules. You can go at your own pace. So you go through and kind of look at it. It's geared to work with putting a business plan together. So there are people that kind of binge watch it. We'll watch 4 hours a day for 4 days and be done with it. And there are those that really will go through a 2-hour section on a weekly basis and go for eight different weeks. So you can do it at your pace. The great thing is the presenter, Celeste Young Ramos, who's been on the webinar Wednesday a number of times, restaurant consultant, is available to also talk to if you have any specific questions. So now let's get into some lending questions that are out here. There's some in the chat box, and I'm going to start first with this one. It looks like it's for Keith. With the 2001, or actually, I'm looking at a different question. So it's the 504 program, and actually, what studies are out there to actually show the success of the 504 program, Keith?
So we're a federal program, so there's a gazillion studies out there. The studies are primarily focused on job creation, job retention, and defaults. And I will tell you that the 504 loan program historically has had a very, very low default rate. And that's primarily because probably 5% of our businesses have been in business for a while. So we do very few startups. So the typical 504 customer is you look at the Great Basin Bakery. Let's say, for instance, they were just leasing that building and they had been leasing it for 4 or 5 years and they wanted to buy. Well, they've been through a lot of the ups and downs on can they make money, can they not make money. That's our typical customer. So if you're looking purely at the defaults, they're very low. I'll give you Midstate as an example. In the last 5 years, we've done 100 plus, couple hundred loans. We had we had one go bad, and we were able to short sell that property, and we took a minimal loss. Again, with that program, our borrowers are ones that, you know, they're going from a lease to a purchase. So the defaults are fairly low. Job creation, it's very good. We are a zero subsidy program for the SBA. In other words, we make money for the SBA. It's not a subsidized program. As a result, our fee structure is fairly low.
Fantastic. Also, there's a similar question on the SBA loan, and I would imagine, if I could guess what you might say, you would say that there's a lot of studies based on the economic benefits derived from the 7A program. And many of those are done by SBA and also by independent financial parties, and can probably be found online. Is there anything you'd like to add to that?
Well, the only thing I would add to that is technically the idle loan is a 7A loan. So you're going to see, unfortunately, a higher default past due rate on the 7A program, you know, specifically to those loans. That kind of data is going to be coming out here in the next year plus months, where the default in the past due rates are quite high for those particular loans.
Keith, how far does the deep dive go for the purposes of a good character?
So LexisNexis, if you're not familiar with that service, they will pick up everything from traffic tickets to criminal convictions, to short sales, to it's a fairly deep dive. Now, having said that, it's not necessarily a no if you have a credit issue. It's a no if you have a credit issue with an SBA loan, i.e. currently past due or defaulted on an SBA loan, then that's going to be a no. If you are currently past due, and I'm talking significant past dues on credit, then chances are that's a no. If you are still within a probationary period on whether it's criminal, whether it's something of that nature, that's going to be no. But if you had a DUI 5 years ago, that's not necessarily a no. That can be explained. If you had a bankruptcy, let's say 6 years ago, that's not necessarily a no. Now, it may be a no for certain lenders. If it's a AltaOne or somebody else, they may have a lending policy that if you've ever filed, then it's a no. So that's where you need to get with Jon or somebody in your the lending that you're looking at, and find out what they will do under those credit circumstances.
Fantastic. Okay, well, let's run through, see if I've missed some questions in the chat box. So in our chat box today, there's some wonderful greetings and information on a lot of the things that we talked about today. We had a few questions and comments that we've addressed. So how long does a business need to be established before they can apply for a loan and get approval?
504 or 7A?
Well, let's start with the 504, and then we'll ask Jon on the 7A section. So essentially, how long does it take for a business to be established before they can apply?
The standard question is, it's 2 years of taxable or revenue generated information. Now, having said that, if you are, let's say you're a physician that you're working in a partnership or a practice and you decide to go out on your own, well, technically your business has not been around for 2 years, but you've been in that industry. So that's the exception to the rules, but typically it's two years. 7A, I'll let Jon speak to that piece of it.
Yeah, so 7A, we do look at new businesses, but we do require some tax returns from an individual standpoint, as well as a personal guarantee, right? So with any new business, a guarantee is going to be a must. So one thing that you want to do before you apply for an SBA 7A loan is make sure that your personal credit is on par, right? Because they are going to look at that. That is going to be considered. So when you are starting a new business, it is difficult to do any type of loan without a guarantee, without a personal guarantee. And when I say personal guarantee, that is your personal credit guaranteeing the loan or the business loan that you're asking for. So we do consider it, but again, remember that personal credit does take is a big portion of the decision.
Great. Next question is, I have a cleaning business and was wondering if I could get funding from the government to help with the elderly who cannot afford for the services. Any information on where to go would be appreciated.
So are they looking for, is there a way for their elderly client to get some type of subsidy for their business?
It sounds like they're looking for that, or they're looking for a way to have maybe the elderly be able to find some support to pay them for the service.
Yeah, I know there is nothing in the SBA world for that type of assistance. I think that may be under some type of elder care, Medicare, Medicaid, probably, or excuse me, Medi-Cal type of assistance, but I don't know of anything out there.
Okay, next question. Cruising on through the chat, see a lot of the events coming up, according to of course, the ones we've talked about. We got the deep dive question. The next class, when does the next class for developing your business plan? Those that are on the food side of things, what they are is they're interactive, so you can take them whenever you want. So they start whenever you click go. Another question is if there's a fee, and the fee is they are free. So you can contact our office, 654-2856, and we can give you more information. So what would be the credit minimum for the 7A? Jon?
So again, I can't really be specific on that as far as like a credit score is concerned. Everything is really kind of put into perspective as far as what we can require. I can't tell you if it's A+ or A credit, but everything is really reviewed. So again, the character, the collateral, the capacity, all of, the 5 C's of credit is really is considered. So I can't, the way I look at credit, it's not black and white. So the way I see things is that there's always a story to something. So it's hard for me to answer a specific number or specific any type of specifics to that. So unfortunately, I'm not the best to answer that question. Sorry about that.
Well, you haven't done a lot of deals with your SBA department. That'll probably evolve over time. So
I will say the SBA, again, the EIDL and the PPP program did create a different set of parameters that the SBA has started to look at. Again, the goal of the SBA is to get money out and assist small businesses. So there's not really they're trying to reduce their barriers to entry to the program. So they're looking at some models that historically they would not have looked at, which does have some minimum credit scoring. Again, but like Jon said, that's in partnership with 4 or 5 other things. So yeah, you may have a FICO of, let's say, 700. I'm just spitballing, but you have $5 million in debt. Well, okay, you can't afford to pay the loan payment, but you got a great FICO, so that could turn into a no.
One of the biggest factors that we look at, and this is when I mentioned the pre-qualify, I didn't want to go into too much detail, but when it looks at the pre-qualification, we look at the debt service coverage ratio. So we're looking to see how much cash you have in comparison to how much debt, right? So to see what that payment is going to be, we add that into the calculation. That way we can determine, okay, yes, this is going to be a sufficient SBA. This is a good opportunity for the applicant, and an SBA will consider it. So that's where we start with our pre-qualification. So that, in essence, if you understand what your cash flow is, then you'll be able to determine whether or not you're going to be able to move forward. And my understanding that, and Keith, you might be able to help me out, the DSCR, debt service coverage ratio, I think it's 1.25.
Yeah, you can. They'll let you go a little bit below that, but they'll accept projections.
Yeah.
So you may have a debt service coverage ratio, excuse me, in 2023 at 1 or 0.95. But given your projected increase with the assistance of the loan, if you can show and make a valid case where this loan's going to allow me to increase my gross along with net, and my debt coverage will improve, and they're valid assumptions, then you can make a case.
Right.
But historically, they do look at 1.225 or 1.20.
And one other thing to consider, California taxes were just due here on the 16th, right? So, but if you think about it, that's 10 months that have gone past since the 2022 taxes, right? Or since your 2022 expenses. So you may be asked to provide interim statements or interim statements to help us understand, how the company's doing in 2023. So also keep that in mind as well.
A little fun fact is they actually deferred them to November now.
Oh, wow.
So
even longer.
Both Fed and state. I think it was a volume issue, but if you didn't make that October, you do now have a November extension date now.
Well, thank you.
Great. That's great news. Okay. I'm going to have, I know we're running along, but I'm going to ask one last question to Keith, and that is, we've been seeing a lot, and I think with the 7A, I read where there is a minimum liquid FICO score, and it seems like we're moving away from the consumer FICO scores to the liquid business FICO score, which looks like, I think I read it was 155. And I don't even know what that means because I'm not familiar enough with it. Have you been dealing with much with that particular score?
No, we don't. It's more of a 7A. We've always, again, 504 is a little bit different animal than the 7A, in that we have defined collateral, i.e. real estate or equipment. But what I will say is that the SBA is trying to refine their process to get more money out in the street, and to eliminate or reduce some of the barriers that if you purely looked at, okay, your FICO's got to be this, and you got to have this and this and this, then we're not going to give you any assistance. Well, that may eliminate, especially in the underserved communities, it may eliminate, folks from having the ability to get some financing. So to give you a long answer, Kelly, I think it is purely, driven by the fact is, how can we help the small business, recognizing that there may be things that go into your FICO that we can eliminate.
Great. Anything to add, John? Okay. Well, I think that's going to wrap it up. We haven't ran long like this in quite a while. A lot of information, a lot of stuff going on in small business finance, all kinds of fun stuff. So, Keith, John, thank you both for joining us. It's great to have you guys on. I guess I'll be seeing you tomorrow night, John, and Keith, I'll probably be seeing you later this afternoon. So, okay, that wraps it.
Thank
So
you.
for Keith and John, I'm Kelly Bearden. We'll be back next week. Webinar number 296. We got a good webinar next week. We have Josh Fiegels from LivePlan on talking about the new updated changes for business planning using LivePlan with AI. Yes, they've improved it with AI now with your business planning process. We will talk about the number of licenses we have here at the CSU Bakersfield SBDC that you can use for free in using that particular product. So you need business plan to get funding, I'm only saying. Okay, so for Keith and John, we're out of here. We'll see you next week. Goodbye, everybody.